Hi guys. Today we will analyze Cummins Incorporated stock, and calculate its intrinsic value using two different valuation models. Enjoy! Hit the like button and subscribe to my channel if you want to see more videos like this. Technical analysis. The stock's overall performance in the market is below average. Also, recent evolutions are not positive. Both the long and short-term trends are negative. It is better to avoid buying stocks with negative trends. Support levels are around $195 and $180. The next support levels are around $170 and $160. Resistance levels are around $230 and $236. The next resistance level is around $244. In the last month the stock has been trading between $189.50 and $221 range, which is wide. It is currently trading in the middle of this range. It may be a good idea to wait for a pullback before considering an entry. The stock has an average volume of 1.4 million. This is a good sign, as it is always nice to have a liquid stock. The stock has been in downward trend since March 2021. Be careful. Intrinsic value. Buy low, sell high. We have heard it many times before. But how to know when it's low, and when it's high? The intrinsic value of a stock is its true value. It refers to what a stock is actually worth, even if some investors think it's worth a lot more than that amount. Intrinsic value is important, because it can help investors understand whether the cost of a stock is undervalued, or overvalued compared to the market value of the stock. Let's calculate the stock's intrinsic value. For more accurate results, we will use two different valuation models to calculate the intrinsic value of the stock. Discounted free cash flow model, using the formula below, then, valuation based on earnings per share, 5-year average P/E ratio and expected growth rate. First model, discounted free cash flow valuation. This spreadsheet contains some financial data that we will use for the stock valuation. We see that the average revenue growth rate of the stock has been around 7% per year, for last 5 years. We see that the average profit margin of the stock has been around 8% per year, for last 5 years. Also, we see that the average free cash flow to net income rate of the stock has been around 112% per year, for last 5 years. And we expect 8% per year average stock market return. Now, let's consider 3 different scenarios for Cummins Company: bad, average, and good. First scenario. Cummins will have bad performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be low, 4%. Future profit margin would be low, 7%. Future free cash flow to net income rate would be low, 70%. In this case, the fair value of the stock today would be $180. Second scenario. Cummins will have average performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be average, 5%. Future profit margin would be average, 8%. Future free cash flow to net income rate would be average, 80%. In this case, the fair value of the stock today would be $238. Third scenario. Cummins will have high performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be high, 6%. Future profit margin would be high, 9%. Future free cash flow to net income rate would be high, 90%. In this case, the fair value of the stock today would be $308. Second model. Valuation based on earnings per share. This spreadsheet contains another financial data that we will use for the stock valuation. The current earning per share price for the company is 14.61. Minimum rate of return. I will use 12%. Because when we invest in individual stocks, we are looking for a higher return than the S&P 500. For Cummins, analysts forecast growth rate around 6% per year in next 5 years, and future P/E around 12. Again, I will use 3 different scenarios for Cummins Company: bad, average, and good. First scenario. Cummins will have bad performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be low, 4%. Future P/E would be low, 12. In this case, the fair value of the stock today would be $90. Second scenario. Cummins will have average performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be average, 5%. Future PE would be average, 16. In this case, the fair value of the stock today would be $131. Third scenario. Cummins will have high performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be high, 6%. Future PE would be high, 20. In this case, the fair value of the stock today would be $178. As you can see, today the stock is overvalued, $206, even if we expect the company's high performance in future. The fundamentals are good. And the stock looks fairly priced. However, the stock has been in downward trend since March 2021. The stock can drop lower before it goes up. I like the company and I like the stock at these levels. However, I will buy the stock when the stock shows signs of reversal. Company's strengths. Cummins is an American multinational corporation that designs, manufactures, and distributes engines, filtration, and power generation products. Cummins also services engines and related equipment. Cummins is known for its high-quality, fuel-efficient products. So, the company is expected to benefit from the high cost of refined and distillate fuel relative to natural gas, as well as from strict environmental rules both in the U.S. and overseas. The company is also beginning to benefit from increased North American truck production, reduced trade tensions, and higher sales in China. Cummins announced that Cummins would acquire Meritor, a provider of drivetrain, mobility, braking, aftermarket, and electric powertrain solutions for commercial and industrial vehicles. The acquisition will help Cummins to expand its product offerings, especially in the area of powertrain components. Management expects continued investment in the development of fuel cells and electrolyzers, as well as products to support battery electric vehicles, to drive strong growth in 2022 and subsequent years. In addition, the world's first 2 hydrogen trains, in Germany, are being powered by Cummins fuel cells. Return on assets of 9%, return on equity of 25% and profit margin of 9% are amongst the best returns of the industry. Cummins is financially healthy and should not expect problems in meeting its short and long-term obligations. Risks. The company continues to experience significant supply chain constraints, which have resulted in higher manufacturing, logistics, and material costs. Loss of market share in electrification to new entrants. Currency and political risks. With approximately 40% of revenue generated outside the U.S., the company's results are linked to global economic trends, particularly in growth markets such as China and Brazil. Economic conditions in these regions can be volatile and hard to predict. Highly cyclical nature of the North America medium and heavy-duty truck markets, which is the largest end market for Cummins's engines and parts. Demand for new trucks can see ups and downs in the short term as trucking firms occasionally push their industry into overcapacity, and need time for demand to catch up to supply. The revenue is expected to grow only by 6 to 8% on average over the next 5 years. The earnings per share is expected to grow only by 9% on average over the next 5 years. Thank you for watching. If you found this video helpful, please hit the like button and subscribe to my channel.